Crypto sniper hat is being worn. How are you guys? How are you feeling? Oh, somewhat subdued. Never mind, never fear. We'll be back. We'll be back higher and further. But first, we got a little detour to make. That's right. What you're going to be hearing with me today is why we're crashing, how far we're likely to go, and when it will be potentially feasible for you to get back in again to earn more Bitcoin so that you can build your Bitcoin balance, and more importantly also play key defense so that you can defend that which you have. Why was all these things happening? And are there any real reasons why we might be stopping now? Okay, let's get straight onto it. I'm going to give you a little opening statement about crypto in general. It's interesting. Last time in 17, we're talking with my premium community, and one of our guys reminded me of the China isn't going to allow crypto to happen pullback. That was in the ballpark of 2017 and was a 38% crash. China wasn't going to allow crypto anymore, and Bitcoin spill. They don't like disorderly ascending markets, you see. Deep down, even though it's a market they still aiming to control fully, if they don't already control it, they don't want straight line up. So there's going to be always pullbacks along the way. Now, why wasn't the 25.7% enough, and why are we now turning a little more bearish and requesting or expecting or behaving and preparing for a further deep dip? Because it's showing us in its more recent price behavior that it's inherently weak, and it has set up structure for a downside. So when we had the China talking down crypto and banning it and all of those great things, like you're going to stop progress, it caused a collapse. What happened recently in the news? Well, we had a little Yellen Yoda, ex-Fed chair, now back in politics again with a frontline role, having a little moan about Bitcoin and not backed by central government. In fact, Draghi, a clip of Draghi saying a while ago, this was a long time ago, saying similar to Yellen, Bitcoin isn't backed by anything. The euro's backed by the ECB. The dollar's backed by the Fed. That's the whole point. We don't want you backing it because you guys are the sharks. You guys are the guys proliferating and giving all to your mates and cheap money for borrowing loans to buy more assets because you know you're going to create more money and you're going to cause asset price inflation and everything's going to go up for the billionaires and the poor peasants that have no equity shares and are just working to live. Their currency is devaluing and they're getting ever squeezed. In other words, the game is polarization. I did a big clip from Greenwich Park 2017. Go check it out on the Market Sniper channel. Got gazillion views, etc. about the great polarization. They are here to polarize. It is a fraud. It's a perpetuated fraud. Proliferation is not sound money. It is a fraud against you. Every time they proliferate currency, they are taxing you. It is inflation. And they will tell you, oh, but the inflation numbers are low. Food inflation is up and inflation numbers are down. How's that possible? Because you're measuring the goddamn wrong things. Because your coffee bags in shrinkflation has got smaller and costs the same amount of money. Because your toilet roll unwinds and has less squares in it. Because of lots of tricks of skullduggery. Like for like, comparing one period of inflation with the Ronald Reagan era on shadow stats, you should be on double digits if you're using the same measurements today. So we know their game. So what's happened? So Yellen Yoda did a little bit of funky magic Bitcoin bad. And just before her, Agent Orange, Lagarde of the ECB, was doing something very similar. She'd also have a chat. Isn't it funny? They reel out women now because it's easier to get. They need a new gender for lying, basically. You're going to trust a woman. Who doesn't trust a woman? She's a mother. She has children. She's not going to lie to you. And of course, they get these Agent Orange and Yoda Yellen to come and say and speak Bitcoin bad. They need to see a reaction for that. They need to have a reaction to that. So particularly after a strong move, they'll wheel them out. You think these things are unscheduled? That the ECB head and the ex-Fed head, I don't know if she's the Fed head again or what's going on, or whether she's just some treasury goon, but she's around to do the ne'er-do-wells activity. Modern monetary theory is here to stay. It's here now for a while. People keep saying, I wonder when they're going to implement MMT. It's been around. It's been implemented, buddy. Are you waiting for UBI to confirm it? Let me tell you, it's here right now. 2 trillion. Biden. Hello. Boom. Like that. 2020, 24% of all dollars ever in circulation were created. They're killing currency. They're taxing you harder than they've ever done. The game is to squeeze you. They're now locking you down in your homes, in your houses. All of this is happening. So the two chief Satans of Europe and America showed up to talk smack about crypto. They have to see some reaction. Otherwise, the market just laughs them off and everyone will be doing memes like they do for Peter Schiff, where it goes, yawn, we don't care what you think, bye, off to the moon. So we're getting a bit of a reaction. By the way, we had done a lot. You need to remind yourself of the big time frame charts. We don't go up in straight lines. We ran our first cup gold nugget target. You might remember, I'm going to be referring back to that. Who, long-time watchers of the channel, first cup gold nugget, do you remember that? Way back when? Yes, well, we blasted through that. We blasted through the top of our overperformance bands and then we pulled back through. That's a warning. That means localized top out potential. And we've been a bit more precautious. I gave a sort of heads up. I wasn't quite got my handle on everything, feeling a bit twitchy and nervous. The inner things were saying something's going wrong, but I couldn't quite put my finger on it. I hadn't had time on the charts, etc. Been in the melee of the day to day. So we did a quick live stream from my device, if you remember. And now we've got a more clear-cut idea of what we're here to tell you. So we're going to tell you in this video where it's going down to. So let's have a look at some charts. Bitcoin USD on the Binance. You'll see it now. This is a structural draw. Now, before I break down into this one, I'm actually going to change the time frame a wee bit and pop up roughly to the 3 days. I want to remind you from whence we have come. From whence we have come. Lots of drawings, lots of scribbles. I'll take them off temporarily so that you aren't blinded by the mass of it. But in essence, with drawing tool, he says, he grabs, which color am I grabbing? Which color do you want? I know which color you guys want. You want TG Pink. Essentially, we started there. Sniper sights over there. Boom. It was our second most important HVF in the Great Breakout. This was the real breakout, but you got a second chance after a mini head and shoulders in there. Go drop a time frame, you'll see it. So let's understand what we've done. That was just north of 10,000 K, I think it was. 10,070 odd K, it was somewhere around there when you finally got motoring here. And boom, next thing you know, you're at 4.2x. Now, you're not going to go forever, ever more parabolic without some semblance of reaction. I want to point out one other point where we did get reaction. This is not a log scale chart. I will change it to log scale, but I first want to show you in nominal terms so that you can realize the parabola that we've gone on here so far. The other area where we had a little bit of thought and we had a little bit of stip-tap-toe and we had a dodgy month was November. You might remember November was a little bit skittish. A little bit up, a little bit down, a little bit of wind up. And then we were very fortunate to get that key inflection point. You'll learn all about that, by the way, in a course and a program, if it's what you want to do and if you want to learn. Links are below. Click and book and call. Costs you nothing. And you won't talk to a salesman, you talk to a trader. How about that? Anyway, mini series also, by the way, if you want that, grab it, totally free, no cost. 4.2 times you've gone up from your 10,000. Are we not entitled to some degree of reaction? How much further? Yes, but the institutions, yes, they're there. And guess what? Like anybody else, they don't want to overpay. And if things are looking a bit toppy, and the central bank queens, the queen satans, the overlords of darkness are speaking smite about our market, they might let them do their work for them and pick some up a little bit lower down. So that's typically what happens. So 4.2 times, we are up at 42 at the highest point. Now 3x as we're sitting on the cauldron of 31. How much further do we go? Well, let's deal with that question slightly. I'm first going to drift away from regular scale and give you a more normal viewing of this. So when you're looking at big moves, it helps sometimes to get logarithmic, because then you can get more of a clean cut percentage-based understanding. So logarithmic scale does give you, it gives an idea of percentage moves. So it just stops it from looking too much like hockey sticks all the time, super flat and then super parabola. So here's your hockey stick move. Now you'll probably notice that the 19,000 was a key level. I'm going to put the special lines back on for you. In fact, we can probably afford a 2-dayer now, or maybe even a 1-day. Let's go 2. Squeeze it up a tiny bit. And put the eyeball on. I think we can actually drop to a day. Fiddling with these time frames. Get back to a day and let's show you where we all are and where we have been. Log scale. Watch this now. You see that? bomb. I've put from the original break the Fibonacci. So let's deal, there's a lot of information on here. So let's deal with the Fibonacci big level, the big ice cream colors that is on the larger one that's on the screen. So I'm talking up top here. Let's draw and show you which one. It started from down here, there, and up to there. Right. Interestingly, you'll note 50% running through our first cup gold nugget. Where's the 100%? The 42K. The 42K. From whence point did we determine that we broke on a primer, a squeezy, Japanesey, so tight, inside the funnel after an even bigger setup structure, which was squeezing, which is why you get such a beautiful key inflection point and breakout zone right there. You really need to learn about this, guys. Links below. Book a call if it suits you. Don't if you don't. Head and shoulder back, return move. Second most important HVF, also there. So let's have a look at that volume by price, as well as that Fibonacci. So we've got 50% and we've got endorsement for our most significant number, 25,000. Then our second most important level inside the HVF is the interim level 2, which was where we rested. Remember that bit? I told you you'd get a little bit of a smack back and a little bit of a smack back. Then you got your gift and you got your second gift of a pink transgender sights for a key inflection point to go leverage long for the upside. And what a lovely straight out the box run you got. You got another little wind up to take you home that took you through the target. Isn't that beautiful? All the way on the upside. Why am I visiting history? Because history helps you understand the future. That's what technical analysis is all about. You look back, you realize what was important and critical, because those levels will become significant again when you are facing a movement in the opposite direction, which is where we are right now. Okay, that's why we do it. Where was your highest volume by price on this entire journey up? Yes, you guessed it. Funny that, 19,258. We gave you that level before the volume even came, before you even traded, 19,258. We told you your rest level was 19,258 on this channel before Bitcoin traded 19,258. Later you look back and you say, damn, that guy knew the level before it even happened. That's called useful. It is, I'm afraid. I will say so. HVF method is awesome. You should be doing it. So anyway, that was a key point. You can see the volume by price at that level, one of the highest. Now we've got up to this level. Now the amazing thing is, where we taking you on the way back? Let's go in. By the way, overperformance bands, you should learn how to use them. We popped out here. That's telling you we're getting a little bit fluffy. We went absolutely doolally there and then smashed back in. Wow. You break out your overperformance bands and you break back in, you should technically be closing your trades. You'll learn how we use overperformance bands. All you need is a bit of training. Do it if you think it's worthwhile. Don't if you don't. So that was a short. Then we rallied back up and then we have been squeezing for our first inverted to drag us back into the zone of where we want. Why? We got too excited. We became an erectile projectile and went to the moon on a parabola to the moon. We got to slow it down a little bit. The road to 100K is made of many small steps. You can't sprint your way there. Not the whole way, not without taking a rest. And that's exactly what's happened. So back in black. We're going to mourn for a while. We're going to come up for a while. In fact, even shorters might make some money. So now I'm going to take you into a shorter time frame. You needed to understand that macro. I needed to give you the big picture on that. So let's go back in and explain it a little better and a little more on a shorter time frame. So back to 2 hours. This brings us to the guilty party there. It looks like one of those dogs that have been chewing up the pillow when you come home, actually, this little bit part of the Bitcoin chart. He's been a bit naughty, hasn't he? Oh, who's a naughty boy? Was it you? And the dog's going like this, kind of like that. That's kind of how Bitcoin looks right now. A little bit sad ass, a little bit sorry ass, been making out a little bit not nice. So a little bit concerned. The concern started when we had the initial grind line. You'll learn about grind lines as well on a program there. And then we got this weak rising wedge in there. That was making me kind of nervous. Lots of legs up, lots of legs down, lots of legs up, shooting star, marginally higher high, marginally higher high. All these things very dangerous. Then big shooting star at the top there. Plus you've already broken one grind line and now you're breaking another. And I'm like, this don't smell right, this don't smell right. Hadn't yet quite got my handle on where we at. Needed to remind myself of the bigger picture stuff. You've got to keep watching your big time frame charts to understand why things can happen. You've got to remember that you've been having it all roses all the way up. Through the first cup gold nugget, it was the easiest bull market to ever trade. You had a short period of rest at the 19,000. That was it. Otherwise, Up, 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 and more up. Buy every morning, go long, make money by the end of the day. End of the day, boom, boom, boom. Easy peasy. Not so Japanesey, no squeezy. Now you're getting a squeeze at the top, and now what's happening? We're looking at something that could be heading to the downside. So why are we getting a little bit of support wicks right now here? Isn't it all over? Isn't this going to turn into a hammer and reverse back up? Here's why I think you're getting supported right now. It's a simple key level of significance that comes from that low. You always size up a new low before you run it. In the same way, you often make marginally lower lows. You see that low? We sized it up and we just ran it. The short and resistance traders lose. Remember, we always tell you that. They lose. They get in short, they get rallied. Then they come in and they short this new low. What happens? A wick and they get rallied. Oh dear, oh dear. So what's going to happen here? What do you think? Patterns, patterns, patterns. Patterns are made of people's behavior. Continuing to behave in the same way, continuing to get the same outcomes. So you have a little look up, you form maybe a bear flag or maybe a rising wedge, and next thing you know, you have a dip down and you just run that low and you have a snapback rally. Because everyone's going to go short at the 30,400, and they're going to get whiplashed out. They're going to be weak hands, they're going to have weak positions, and they're going to be shaken out. That's what's probably going to happen in our worldview. So it's going to be staircase up and down, but there will be a spiller. There might be a point where it's a real thriller, a spiller all the way from Manila. And you're going to love that if you're short. But if you're long and you're holding leverage longs, you're going to run into great trouble. And that's going to be a problem for you. So you need to think about leverage long positions right now if you're still holding them, depending how early you had them and when you had them put on. All the way up, beautiful HVFs giving us key levels of significance. How far does this one go? Let's put the light back on and see what saith the HVF method. So, key part of the HVF method. I'm going to take this Fibonacci off. There's reasons for it. You don't need to know. But you can always find out later if you want to come and join us. Squeeze. Where's the fulcrum of our squeeze? Right there. Right there. The highest volume. That's what it's telling me. Right there. That's where we are. Where's the target for that? 26,366 on a 25,742 first cup gold nugget, which got confluenced by that upside HVF there. Major levels right here and a target there. You're going to get a little overrun and you're going to just run that. That's my best guess right here. We aim to answer your questions. How much more pain for Bitcoin? How much further does it go? What else is happening here? You might remember there's that fib level. You see the two different shades of green? They actually talk about 50 Shades of Green, by the way. I was watching a movie. He was an assassin. He said, humans see 50 shades of green, not grey. Because we used to have to look through bushes, felt, trees, and all sorts of things. 50 Shades of Green. Anyway, you've got two different shades. I think you can see the difference. That's your 50% mark. That's your 61.8. There you go. So you can see us using volume by price. You can see us using Fibonacci's, and more important, the most powerful tool of all, the Hunt Volatility Funnel method, which you can learn how to use in conjunction with all these other amazing tools. And what will it mean? It'll mean that you'll probably have a buy point just after these levels for crypto. You probably have a buy point just after these levels. Little Cameroonian flag made of green, yellow, orange, and red. Over there, down there, you'll probably support before that if there's an overrun. And I think you want to cease and close all shorts at the 26. If you happen to be short, by the way, shorting is an advanced thing. It's not easy. It should be done by someone who really knows what they're doing. You shouldn't short now. You're probably going to get a little bit of a rally or a continuation pattern of some form before you break the lows here. So please, this is not a call for retail guys watching a YouTube channel to jump on, borrow up huge amounts of tethers and to go short. If you're technically advanced and you understand the risks and you own your own trades, you might be able to make something out of it. We've had a discussion internally in our community. The best served people are just do no damage. In truth, most of you should do no damage. Most people who attempt trading do damage. So be careful. You're not trained. It's not a specific skill, but I suspect the market goes down. A smart short trader may make money, and not smart will actually sell every time it's dumping and get shunted out every time it has a small continuation pattern. So you can lose going short even in a downswinging market. Please be aware. Special warning, like on that cigarette packet. Think of it as this dirty lung. sitting there. Be careful. Okay. The game is at the end when this thing is going through $100,000. We are still big macro bulls. First cup gold nugget is awesome. You're just pulling back into your overperformance bands. You might have a little sweated out period, a bit of a hangover if we are to be correct. We don't know. It's on balance of probabilities. Trading is a probability game. We can always be wrong, etc., etc. All the usual T's and C's. But where else might you get a reaction? Well, you might notice that we had rising wedge before we went really strong here. This is where things kind of got real cranky. You were popping outside the overperformance bands here. That was the beginning of the, whoa, we got a bit ahead of ourselves. And in actual fact, you should have closed up and around any of these points when you traded back into the overperformance bands. That would have got you out very close to up top there. No, you would have seen the 42 and you would have seen it come down and you would have got out still deep in the 36s. Now what's happening? 31 threatening to break into the upper 20s. So why do I mention the 61.8 and this rising wedge? Well, this was a key level as well. And guess what? It sits at 29,800 just below the 30K. That is why you're summing up this level and what comes just after it, because you've got a key level of significance of 30,000 just above that as well. That'll see you now trade back in the 20s. Don't forget you had a 4 in front of you at one point and everyone was calling 50, including me at one point. So, yep, we've got to deal with how the market changes. So that is it. Let's take a look at some of your comments. By the way, we love your comments. We value them, both in the live stream and in the video afterwards. So here's what I'm going to do. I'm going to reply to the 5 best comments personally in detail so that you get an answer from me for free on whatever you write. So we want to see those comments in the comments. Pop them in. I'm going to scan them through. By the way, I read all the comments. I just can't sit and write replies. So I've got 3 Twitter profiles, 3 YouTube channels, comments on everything, DMs on everything. If you really want to hear from us, you have to email support@themarketsniper if you've got something you want to do, because that actually has someone permanently manned and we answer everything. We can't answer everything on social media, but I'm telling you, I'm going to answer the top 5 questions and comments in the comments section after this video is done. So still today. So you can post in there and tell us what you want to know and what do you think. So some of the questions. Is ETH going down too? Says Annie. Is it Annie? No, it's Amin. Sorry, Amin Hanifa. I almost transgendered you there and misgendered you into something you might not be. I apologize profusely. Many apologies. So let's go straight into Ethereum. So the interesting thing about this is Bitcoin. Here's what I would suggest to you about alts and Bitcoin. Initially, Ethereum has shown relative strength to Bitcoin. However, if you have a consistent, steady sell-off that will take you to 25,000 in Bitcoin, that is where we're sitting at 31s round about now, 31s and a bit, that is not going to go unnoticed in the alt markets. And that is going to lead to some form of reaction. And generally, the higher beta alts will react more so in percentage. Now, if you have a look at the market cap, you will have noticed that in actual fact, DOT was up today, despite Bitcoin's travails, and 1 or 2 was showing some relative strength. So with Bitcoin down 4 or 5%, now 10% in fact, you've actually got DOT up 5. So little highlight for DOT. So for now, temporarily showing relative strength. It's noteworthy, but in the long run, they won't be able to sustain that in my view. You've also got ADA that was flat last time I looked. Chain is down less, down 3. I think it was flat earlier on in the day. It's starting to react. Where's ADA? ADA was flat. It's now down 3 versus it. The problem you have with the alts is eventually the longer the Bitcoin goes down, the more eventually they react. And then they have to play catch up and get out. So actually, if you're stuffed with alts, earlier to cull them is better and buy them back when Bitcoin hits 25K. If you're active, if you're not going to be active, you're not watching, just hodl on. Couple of months time, we'll probably be back up and beyond these levels. We don't know how long. Could be a couple of weeks even. It depends how hard Bitcoin falls and how fast. Actually, a hard, brutal culling will quickly kill lots of leverage longs, clear them out, and the faster, the harder is better. And then we can snap back rally. with some gusto from that 50% mark. So we've had a massive move. We take back half of it and then we go bouncing back up. We get ready for stage 2. That will be even better for, that's a great time to get leverage long. Right now, certainly isn't. So that's pretty much it. So what's going to happen with alts? I suspect initially they've done well, like our friend Polkadot, but in the longer run, there will be some catch up. Polkadot, for example, being exceptionally strong, may at the end of the day end up going down in percentage terms less than Bitcoin over the whole crash, but that will be an exception. Don't try be the exception. Play safe. So what about Ethereum, you ask? Well, Ethereum's now down 7.8%, going on 8% to Bitcoin's 10. So it is starting to catch up. One of the best ways to read this is to look at the FBTC chart, which we have right here. Now, initially, we are saying, well, could this beautiful squeezy Japanesey just see us pop just enough to get the 4 and then die back down? Why 4? Because as we've told you many times before, 4% is the key neckline for the inverted macro head and shoulders on FBTC. What did he just say? Some of you said, I don't understand any of it. Okay, we'll remind you. That is the key inversion point of the key inverted head and shoulders. And it would be nice if it made the 4. I'm not sure if it's going to do it now. It seems like Bitcoin started rolling a little too soon. It's kind of fluffing and spoiling the lines. It's like nearly there. It's nearly there. Could Ethereum hold up a little bit longer, only go down, a few more percent while Bitcoin goes 5 or 6? Possibly. So that FBTC could go up in relative valuation, but both are going down in USD or USDTC or whichever stable coin you've chosen. So you might just want to think, unless you're trading FBTC, why are you holding on to any form of alts? Buy them all back when Bitcoin hits 25,700. First cup gold nugget target, a level you were given here on this channel. And actually, on the way up on Bitcoin, we didn't get a great reaction at first cup gold nugget. In fact, I'm going to give you a special secret. There's a huge void and vacuum there on the volume by price. You literally pushed right through it, which might be why we have to revisit it back down. So sometimes you have very, very big horizontal bars that represent the volume by price, and sometimes you have absolute voids. In other words, you just push through very, very quickly. It's very interesting. We teach that, voids and vacuums. You'll learn more about it. Book a call if you want to. Okay, you can learn all of these skill sets and do it for yourself. You can carve a chart up as well. So in terms of our 4% Bitcoin meet the neckline objective, it might not make it, or it might just make it on Bitcoin being weaker. Bitcoin might rally now and then have a real vomit, a proper puke to the downside, and that could be violent, and it'll catch Ethereum fairly flat-footed, and then Ethereum will start falling and selling off as well. During that period, you might get a little bump of relative valuation. You're at 3.8. Can we reach a 4? Maybe, but I would expect it won't be for very long. Note here, key inflection point. You accelerated down. You came back and visited. You had a baby shoulder inside your big shoulder here. Then the big ass head. This was the bear market to end all bear markets. We called you long here and said overbalance Ethereum throughout this, and called alts, included other in that lot. Then we said head and shoulders, you're going to run down here. You're going to revisit potentially the 25s. You broke sub 25 in spite of having a bump along the way and a little descending triangle in there. So the big patterns have worked here, guys, and 4 is a key level. It would be great to see it met, but it might not happen. It might come close, and we might have, like this one had a little cup, you might get a little cup here as well, and then come back later. So we might dip. I don't know. I can't tell you. But I don't think Ethereum is going to break now and do the main breakout. I think we're going to have some complexity, like over here. So I think there will be a down leg at first, and I don't think we get a clean break. It would be quite special if Ethereum, it's already shown that once Bitcoin was down 10, it's now lost 8. If it's not showing it on the first day, it's not going to show it on later days. So I would expect Ethereum to go down a little bit with Bitcoin, or maybe do something like this. I don't think we're getting our break, return move and going for 6. In other words, that's going to come the next bull market where alts can be strong. So now we have to sweat out a pullback period on crypto generally, is my view. So you can ask me the same question, and some of you guys like to do that, because you've got a different token. You've got EOS, you've got Chainlink, you've got whatever. Now, Chainlink as well held its own a little bit. But if Bitcoin goes down to 25, eventually the others will respond. And when they respond, they play catch up as well. So you actually have a lag time, possibly, where you can get out higher and get back in later. I don't think Bitcoin goes down and all the alts stay where they are, and in fact go up. I just don't think they stay where they are in dollar terms or go up in dollar terms. They go down too. It's now just a relative valuation. And every time people call it over, and with the Bitcoin dominance and other coins being relatively stronger, in bear markets, they're invariably wrong. Bitcoin lost 85%. Most alts lost 98%, and quicker and harder and faster. And Ethereum was right, not far away. I think they were around 96% from all-time high to absolute low. So I don't think that rule changes overnight, but the market will need to show me it's changed by the actual ETH-BTC chart. So no matter which alt you mention, I'm going to say, get out while stocks last. It's not advice, it's entertainment, it's my opinion, it's what I've done. I had a cheeky bit of Nano and Dash. Minute it went wrong, switch. Some of our guys have even gone short them. In other words, those structures are now inverted structures. I've not elected to do that. So let's have a little peek. What other questions have you got for me? Thank you a lot. I'll book a call for the HVF method. Best way to increase the capital. Indeed, Amin, glad to have you, bud. Have a chat. Danny Rowe, all altcoin market, almost no dip. Altcoin market, almost no dip. I can't agree with that. I think it's led by Bitcoin, but I think it will be followed by total. Remember the lag effect. Remember the lag effect. This is a dip. It's also a marginally higher high. And this is going to be very Ethereum dominant. Remember, Ethereum is 140 plus billion. And the next biggest is Polkadot at 14, 1/10. So you might have a rising wedge. But this violence of sell-off here, that was Bitcoin. That was also when Bitcoin turned down. So you can't say it doesn't happen to the alts. Bitcoin turned down. You went from a 350 going on 360 market cap, call it 355, and you traded sub 250. Think of that in percentage terms. You were 355 and you traded 245. 355, 110 billion on 350 billion where you started. It's almost a third. Did Bitcoin fall a third? No, it didn't. No, it didn't. Large part Ethereum, but there's lots of other crappier coins in there as well. So I wouldn't be too bold. I wouldn't be too bold about hanging on to alts. I know you don't want to hear that. Sometimes you just don't want to have to do something. Because your instinct tells you long-term hodling is good for you. Generally, you're right. Generally, I'd say you're right. If you aren't trained to be a trader, most people just sitting with the amount of Bitcoin is best for them. And their alts that they love. But if it's going down, the alts go down. And in time, they go down by a bigger percent. You should consider the funding rates in your analysis, says the great Closet. Yes, Binance and many of the others have been pushing up. So they're up to about an annualized, some of them are about 60% annualized, your funding rate. In other words, you're borrowing money at 60%. It's more expensive than your credit card. The most expensive credit card I know of is around 29%. It's not one I have. I don't need credit cards. I don't use them. But, normal credit cards, if you're decent risk, 11, 9 if you're lucky, 16-ish. So you're paying 4 times a credit card rate, maybe 5 times in some instances, depending which platform you're on. So it's something to consider. But it's not a problem if you're making money and Bitcoin's crashing. Remember, this is big moves. So it's more a case of if you're investing for the long haul and you're putting a leveraged long hold on, then it starts to add up. You've got to have the money. So every time you are trading, you are actually taking out a short-term loan if you use leverage. Remember that. Be conscious of it. Tertiary extraction, even in crypto. Yep, that's how it works, bud. The tertiary extractors are always there. The great money scheme, the great money racket relies on compound interest. So selling BTC is madness right now. Those weak hands who sold will never get back in. Your BTC has already been bought and paid for in advance of this dip by men smarter and wealthier. So says Pump It. I can see the bias there. Listen, even in the best bull markets. So interesting point. Let's go back to Bitcoin. I've got an interesting point I forgot to share with you. And remember we were saying 25%, 0.7, is that the new 38%? Question mark. And chuckling. Let's do some mathematics together. Different chart. Let's do. Oh, I've already done the maths for you. That was the sum I did. So here you go. 16,250 is how far you'll fall. So I've said 25,700. 25,700 down here, which was our first cup gold nugget target. 42,000 up there. What's the difference? 16,250. If you take 16,250 and you divide it by the amount, 42,000, you get a 38% down leg. So are we back to 38% down legs? Would a move down from the 42 to the 25 give you your 38% down leg that we're used to from the 2016-2017 bull markets? I kind of hoped that the institutional involvement, the normal curve, the ramp up, all these things that I've said to you, they all still hold. And I kind of thought maybe technically that'll lead to slightly smaller dips. But if you end up doing 4.2 on the upside, you're still going to have maybe the possibility of 38% pullbacks along the way. And actually, the best entry points for leverage longs then occur. So remember, this is trader talk, not investor talk. If you're an investor, you never want to use any leverage. You only want to play safe. You're keeping your amount of Bitcoin. You're never using any leverage. You're welcome to hodl right the way through all of this. The difference is, if you were tactically good enough and you felt the assessment justified it, had you sold at where it is now, 32,000, and you bought back at 25,700, you would have $7,000 per unit less to buy. That's quite significant. 7,000 over 25,000, 7,500 over 25, you're almost at a third. You might get that extra 30% of Bitcoin. The game is building Bitcoin balance. That's the game. So if you think it is going to go there and you put it long there and you get out on any rallies now, little bear flag, you'll do well. My opinion is that falls. And that falls is further confirmation of the likelihood of the TG Pink targets that we've given you. Here, all in the purple. These numbers here. Possibility you may make it to this funnel that I highlighted here. This was a final little wind up to get you through your target. There you go. You see how we analyze charts on the way up and why we keep the draws, because they become useful again on the way back down. 38%, 38.7% would be the down leg after 4.2 times up. If you don't think you're entitled to a down leg of that size, hold on to your Bitcoin and ride it through. But recognize you might give up an opportunity to have that extra Bitcoin for every 3 you hold. Yep, maybe every 2 you hold. Okay, so that's my response to that. DOT's holding up well. Yes, T Myers, it is for now. EOS held up well at one point in 2017, going 2018, and everyone said it's the new thing until it didn't. So all these guys remain to be proven. I don't think it's scaled to the degree that Bitcoin has at 14 billion. But it's become interesting and it's showing some relative strength. But remember the EOS lessons. EOS was the new thing. EOS kept going up when Bitcoin was going down until it didn't. And then it fell, and fell. So what's the new stars? Descending triangle on the daily got Bitcoin, says display. It's now a descending triangle to most traditional technical analysts. To us, it's already an inverted HVF that's already broken. So the descending triangle that he's referring to is that structure. And that's how most traditional technical analysts get there. And for me, they're arriving to the scene of the crime a bit late. Could you get all the way up to their rally and then sell off? Yes, possible. but descending triangles aren't good. A layer of support is being lent on. Remember again, this rising wedge. Where was it? 61.8% Fibonacci of this low from our kickoff point. And now you're leaning on it on a descending triangle. Is it bull or is it bear? You'd have to decide for yourself. And there's plenty more that's happened inside of here that gave you opportunities to be earlier, in our opinion. By the way, why is it stalling right now? I have an upside down chart. I want to provoke your autism and your general dyslexia. Have a look with me. Why is it resting right now? This is the upside down Bitcoin chart. It's resting right now because the HVF has just made its second interim, and that's its full target. It broke, it got into a broadening pattern here, it came out of the broadening, did a revisit to the funnel there, and there. Now you had a little wind up. Why was it so fast now? That prompted all of us to come out and stream and talk to you and to explain this great pain. Because it broke out of, there's the funnel, and that's your fractal out of that. And it made that target, which also confluenced with the second interim. That's why you're going to stall and pull back now. And everyone's going to go, he was wrong, it's not going back, it's getting some courage again, it's coming back, and it pull back here until it does that again. Why? Key levels of significance of a pattern. You want to learn how to analyze charts upside down to deal with your bull bias. You know what to do. Book a call. Have a chat. It's time. It's time. It's a decision time. It's a tough time. The bends in the market are the time where people lose loads of Bitcoin and lose loads of value. Let's have a question. We do 3 more questions, and I'm going to answer 5 comments in the comments. The best 5 comments in the comments when we finish the stream. We're getting close to finishing the stream. There's 987 watching. We love that. That's awesome numbers. Thank you. And I look at the likes and I say 176 people are grateful. And I think, thank you. To that 176, you are my brothers from another mother. That's all I can say. And for the ladies, you are my sister from another mister. Yes, indeed. Okay, so let's have a little look at that. What's your guess on what month, year this bull market ends? So start to be cautious October, if we have to do timing, into, according to the halvening cycle, December's are toppy periods. So somewhere in there is popular opinion. I recognize that. My only, again, I'm in the little but it's different this time, which is dangerous. But the difference this time that I'm referring to is the huge institutional take-up. I think we go further, faster. And for that money to get in, we either have to go a lot quicker to finish around that time with a super blow-off high, or we continue a bit longer and there isn't that big sell-off and the dips are a little smaller. But I said the dips were a little bit smaller. Now I'm looking at possible 38%. But we have to say we did 4.2x. So a 38%. Okay. What will we do after that 38%? Well, how about another 270% to the upside from that level, which will be just hunky-dory and groovy. And I'm good with that, and I'm hoping you're good with that. But I'm just saying, look, it's that moment where a couple of bullets fly. Maybe keep your head down for a while. Thoughts on coming hyperinflation? That is very much a macroeconomic question, but I'll take it anyway. It's MMT, isn't it? UBI is coming. It's being tested. What is all these checks that the Americans are getting? It's payment for not working. It's effectively the on-ramp of UBI. The same UBI we warned you was coming in 2017 from a park in Greenwich. We could see all the dirty hands and the dirty actors were putting this topic in place. All the wrong little universities with all their scaly little professors with all the usual memes, white man bad, social justice, or communism is cool. Karl Marx is actually a deeply misunderstood, lovely guy. Stalin is kind of sweet. All of those blokes were doing the UBI thing. It's the gateway to socialism, dependency, and communism. So, of course, MMT is here. Therefore, sound money is over. Sound money is over. It's already over. It's just most people haven't realized it, and they're trying to perpetuate a Ponzi scheme at the moment while they do it. And they don't want all the canaries in the gold mine, gold, silver, Bitcoin, cryptos, giving that game away too fast, too soon, because they're trying to transition from their big ass, heavy old dead donkey onto this new stallion stud of a horse. And they've got to move their crap over. And they don't want you, who's guessed their game, making all the tom and having an easy ride. So they give you leverage and they give you pullbacks and they send Yoda out and the burnt orange to cause trouble in the markets and create a bit of volatility. And guess what? You end up giving them all your shit. Even though you know the script, you end up giving them all your shit. And I'm here to try stop that. So if you like that sentiment, give me a like. If you like it that someone cares enough to stream, buy equipment and say, don't give them your shit and this is how they're going to make you do it, then listen. But I'm not saying to the hodlers, sell your Bitcoin. I'm just saying maybe pick up some more cheaper, lower down. Okay? Maybe if you just hold on to what you got and you get new cash flow over this time, you have an online business, you're not being killed and murdered by the crushing of SMEs, which is all part and parcel of squeezing us all into this hyperinflationary. Hyperinflation, it actually means double digits, by the way. So as a technical term, it means double digits. We are probably on the verge of that. It's not fully hyperinflation. It's kind of more of a stagflation. There is no true economic growth. We're actually in a depression. We're waiting for a recession within our depression. In other words, cycles within cycles. So there's a super high valuable stock market, way overvalued. Businesses aren't earning. There's no chance of any normal tourism industries re-establishing themselves. This is particularly chronic in the West, where they're coming to crush us. All of these things are going. So this is the game. This is Reset Sniper Topics. That's why we have 3 circles on our side. We know Reset. We called this, we named it, we branded it before that bastard showed up and stole our brand line, Klaus Schwab, and all the rest of those turkeys. This is a financial reset. When is it happening? It is already happening. It is a process of many, many years, and then there will be cataclysmic events within that. They have broken the economy out of intent, out of a scamdemic, through an entire series of secret society agendas that I don't have time to get into. But the long and short of it is you're losing your freedom. You're trading freedom for safety, and you're getting neither. And that's what's happening. And you're trading sound money principles to these guys to proliferate, so that they can give out tokens and say, you all rely on state. Government gave you the money. No, they didn't. They had a shell game where they gave you peanut shells that are fast devaluing by the truckload. And you need to trade them while there's still people that'll take peanut shells for Bitcoin, silver, and gold. That's it. And if you understand that, I would like a like. I'd like you to comment in the comment section and I'll be responding to it. 932 of you. Final question. The great closets. They throw you in jail because they don't have an argument or proof. Let's see a comment that's not too profane. Fed must be trading on BitMEX already, says Eugene. Yes, quite funny, and they may well be. Although they put the owners in jail first. What's your market top prediction for BTC? The full macro bull cycle, it's a 6-digit number. And I don't think it stops at 100, although there will be a little bit of sniffing the 100K, 90, pullback, technically interesting, then pump through, then fall back on as support, that kind of price behavior. So that's typically how it goes, and then onwards from there. The truth of the matter is we've got trillions we have to move into. We've got Jupiter to put into the beach ball in the corner of my room. That beach ball is going to have to expand immensely. Jupiter's a massive planet. There's quadrillions of derivatives. There's hundreds of trillions in debt. There's market caps on stock markets running into just about hundreds of trillions. There's 10 trillion of gold, all of these things. And they have to go on the blockchain, essentially. And they seem to have chosen the blockchain. So it's going to be double digits. But we will have a top, a serious final top that will be sustained probably for quite a real period. But money will keep dribbling in. I don't know if we'll have as long a bear market as we had in between halvening cycle number 2 and this halvening cycle. That was probably the longest desert that most have had to walk, with lots of with a false breakout or two. We've had the biggest macro continuation pattern ever occur on Bitcoin. This is super, super powerful and super bullish. The overperformance will be there and more. But once we popped out of the levels, we had to pull back. So that, I think, do you think a bear market like 2018 or 19 happens? Not yet. You don't have to worry about that yet. Be long throughout this year. Just choose your timing in terms of this re-entry. That is it. Okay, guys, thank you very much. I'm going to come back and I'm going to check the comments. By the way, if you see spammers, they often use pictures of my face, the crypto sniper, and they put WhatsApp numbers. There will be nothing good that comes out of those groups. You must block them and report them. We will do the same. I want clean comments. We clean all the crap out. There's a lot of scammers in cryptos. I've got another message that I want to update you on that. with regards scamming and cryptos. We've chased and secured access and found the person who was attempting to sell copies of our content. We tracked him. All copies have been destroyed. All monies have been taken back and returned. The person who reported it will be getting a reward from us. Anybody who does that for us in future reports, anybody who has ripped off, taken our content, attempts to sell scrappy, bad versions of it, report it to us. We appreciate it. We found the guy, and we've got a full statement. And if he ever puts a foot wrong, you'll end up with his name splashed, all FBI records, police records, and everything. So we gave him a second chance. He was a young fella, but we will not tolerate it. We will catch the rip-off artists in all aspects of crypto, not just in stealing our content, but scammers. I want to put scammers out of business. We've got to tidy the shop up. People that are nefarious, doing active nefarious ill deeds, crush them. Give them to me, we crush them. We give it publicity, we crush them. I get the right people to retweet it, we crush them. We get it out there. Let's get rid of the scammers. Do not invest in projects that put 9 comments under one of our YouTubes or anybody else's that's all saying, Google our new scam coin. These are people, anybody who does that kind of behavior, it's very low integrity activity. Do not support low integrity activity. Don't even be curious. It's the way it is. So we will defend our content, we will defend our comment section, and we will look to clean up crypto from all the nefarious actors as much as possible. Help us and support us. You can report something that is obviously fraud, that's taken the picture of my face and is trying to pass off some WhatsApp group. You don't need my permission. Kill him. Let's keep our garden clean. Thank you very much. On that good note, all of you are generally normal, awesome, great people. I'm glad to serve you. Let's see how this turns out. We'll see if we're right. It will pull back now. This is a cycle. You're at an interim level. It'll pull back now. That doesn't mean we're wrong. Wait before you vomit on our comment sections. Wait and see what happens. It's going to pull back. It's at an interim level. If you want to enter short, wait. You'll get an opportunity. Rallies can be looked at, and look for short time frame rallies. Otherwise, thank you very much. We sign out. Thanks for watching. Book a call. Links below. Mini series for those with no money. Go on, be our guest. Learn, start the process. With that, I say goodbye.